Retail or reseller businesses have a lot of unique challenges when it comes to tracking things for tax purposes. A lot of this centers around the tracking of your stock. This is a vital step in not only being able to comply with tax obligations, but for knowing where your business is at. In today's video, I'm going to be going through how you can track income, expenses, and stock for your retail or reseller business. Now, what do you need to track? Well, a lot of that comes down to the why you're tracking it. And to understand why you're tracking it, you need to work out, are you tracking it for tax purposes or for business analysis purposes? So obviously, most people are going to need to lodge a tax return. That is your minimum obligation when running a business, is you need to be able to comply with tax purposes. So you need to be able to know your income and your expenses and your stock to be able to successfully lodge your tax return. So we're going to have numbers that we need to know for our tax return, such as our income and expenses and things like our stock. There also might be things you want to know, such as your best-selling categories or what's your best-selling item. These are all the different things that potentially you might want to know about your business, and some will fall into the tax side of things, some will fall into the business side of things, and some will be both. Now, some people may want to just do the bare minimum. They just want to know for tax purposes, so all they're going to need to know is their income, their expenses, and their stock. But that is easier said than done. Now, income and expenses is pretty similar to any other business out there. We're going to be looking at our ins and our outs to hopefully work out our profit. But the missing step that is unique to retail and reseller businesses is we need to know our stock levels to be able to get this accurate profit figure. Now, the reason for this is our stock plays into what our cost of goods sold is. And we've got two main methods that we can look at. So the first method involves us putting all of our purchases of stock to a stock code on our balance sheet. And then as we sell items, we take the cost of those sales and we bring them onto our profit and loss and reduce the asset. So for instance, if we go out and buy $1,000 worth of stock, it's all going to go to our balance sheet as stock on hand. Now we go and sell an item. We sell that item for $100, but it cost us $50. So on our profit and loss, we're now going to have $100 of sales and $50 of our cost of goods sold, with a profit of $50 in total. And our inventory, or our stock on hand on our balance sheet, is going to have dropped from $1,000 down to $950. Now the other method gives us the same result, but we put that $1,000 as stock purchases on our profit and loss report. But we also have a closing stock adjustment. So to start with, our closing stock will be $1,000, and therefore on our balance sheet, we have $1,000 of stock on hand. Now we go and sell that item, and we have our $100 of sales. We still have our $1,000 of purchases, but our closing stock is now only $950, so we still get a cost of goods sold of $50, profit of $50, and our stock on hand on our balance sheet has reduced to $950. So both methods give us the same end result, but the key is we need to know our stock on hand figure to be able to get to this end result. Now, at a basic level, you should be aiming to do a stock take on 30th of June each year or somewhere around that date to give you that closing stock figure. Now, I will be going through some methods so you can know that always throughout the year. But if you are a small business, you don't have to do a stock take if your movement of stock is less than $5,000, but I'd highly recommend you do it because otherwise you don't know where you're really at when it comes to profit. So what are your options when it comes to tracking all of this? Well, the first option is obviously some type of software. And I've talked about Xero quite a bit on this channel before, so I will talk about that as the example. So you can definitely use Xero to track your income and expenses. In fact, I think it's one of the best options out there purely because of you get the bank feed coming in, therefore you're not going to miss transactions, and it is simple for people to learn. So this is definitely going to tick the box when it comes to income and expenses. My issue with using something like Xero is around the stock side, and this is why it's a bit of a unique challenge for retail-based businesses, is that Xero does have native stock tracking in it. So we can go in here and we can add items and services, and we can go through and we can add every single item that we sell within our store. The problem with this, if you're selling a lot of items, this is a lot of setup work because you need to allocate every single item in this section before you can even put through a purchase or a sale of those items. Now we can go through here and we can put the average cost for those items and the average sale price, which is really good if you're selling recurring items and buying them for the same price and selling them for the same price. It doesn't work very well, for instance, for resellers who every time they acquire an item, it's going to be unique and a different cost. So every single time you'd have to go in here and add this. So it's very time consuming. Now for those that are selling just a small amount of items but on a recurring basis, this is great because you add it in, and then when we go and do a purchase of stock, we simply go and allocate how many of that item we purchased, and this is going to form the back end to getting the cost of goods sold into our profit and loss report. Now, when we sell an item, we allocate that item and it's going to process that. It's going to allocate the cost of goods sold. It's going to reduce our inventory and post everything to our profit and loss and balance sheet. What is great about this is it means we can run up-to-date profit and loss reports at all times to know the exact figures of where we're at because we know what our stock figure is. we might still do a stock take at the end of the year to cover anything that maybe is damaged or lost, or maybe we've accidentally allocated the wrong item along the way. Now, if you're using some kind of third-party software, such as maybe Shopify, you might be managing your inventory through that. There are some integrations where you can push your stock figures back into your accounting software. Now, the chances are, though, if you're doing this, your business is probably at a bigger level and maybe it's a little bit more in-depth. So you really want to make sure that your integrations are actually working and they're actually reliable, because I've seen plenty of people integrate between something like Shopify and Xero, not get it right, and it becomes a giant mess. Overall, I think Xero is a great option for those that are selling a small amount of items. I don't think it really works very well for those that are doing reselling, for instance, because all of your items are unique. It becomes too time consuming. And for those that are selling on a large volume, the chances are you're probably going to have to be looking at a third-party integration anyway, because again, it's too time consuming to do this in the native Xero product. Now, the second option is using some kind of spreadsheet. And this is definitely going to be my preferred option, especially for resellers. So you can definitely use a spreadsheet to track your income, expenses, and also your stock. And that's something I really like about it. You can have everything in one spot. So I'm actually going to be using an example of a spreadsheet I have built myself with my good friend Chris. And the good thing is, it's actually for sale. It is my first digital product that I am launching. And it is in the bio of this video where you can actually go through and buy this spreadsheet and use it yourself for your retail or reseller business. So when we're looking at building a spreadsheet, whether you're using the one I'm giving you as the example here, or whether you're building your own, you want to look at, again, what are you looking to get out of it? And as a bare minimum, we want to get the income, expenses, and the stock. Income expenses, the way I've done it here, we can see we've got a sheet where we put in our income and expenses, and this is going to come straight from our bank statement, or maybe we've paid for a few things with cash. We put them all here, and they're going to feed into a profit and loss report. And that's the key thing if you're using any kind of spreadsheet. You want to be able to put in your income and expenses as they happen and see real-time the profit and loss report. And this is maybe the limitations with some basic spreadsheets. If they can't do that, then you're not really getting that up-to-date data, because you're just data entering but not getting any final product out of it. But of course, the more challenging issue is the stock, and this is why I really wanted to build something that helps solve this problem. Now, the way this spreadsheet works, you're going to enter your purchases as you buy your items, and then they're going to feed into this master stock tracker where we're going to have all of our items listed. And the whole point of this is to know the cost of good of all of these items. They might be average if they're purchased in a lot, but in general, we know how much items cost us. Then when we go through and sell an item and we process that through the spreadsheet, it's going to update our closing stock figure in our profit and loss report. And therefore, we know that our profit and loss is now accurate because it's got an accurate stock figure. And that's the key thing. No matter what system you use, you want your stock figure to be updating regularly, because this is the only way you're really going to know your actual profit. It's all well and good to know you're making profit off items, but if you don't know what your closing stock figure is, you're never going to know that exact figure. So no matter what option you pick, you want to make sure it's something you're going to update regularly so you know where your business is at all times. The tax return is just one component of this, but I think the quicker you can learn that by analyzing your own figures, you're going to be doing much more business analysis and therefore helping your business grow quicker. If you're looking for more tips when it comes to tax for small businesses, this upcoming video, I go through the 6 most common mistakes I see small business owners make and how you can avoid them. I'll see you over there.